Intel is gaining a lot of attention from investors after it released its latest quarter's earnings results. The stock has fallen significantly since then. It was down as much as double digits following the announcement. So let's go into Intel's Q4 conference call to try and figure out what's going on with the stock. So let's get right into it, starting with the CEO, Pat Gelsinger, coming out and saying Q4 revenue came in at the low end of the guidance and was impacted by persistent macroeconomic headwinds, which began in the second quarter and underscored a 2022 that was characterized by unprecedented volatility, which will continue in the near term. So the fourth quarter, the CEO was saying was really bad, on the lower end of what we are expecting. And to make matters worse, we think this is going to continue. Uh, we don't think this is going to ease up. So bad news here for Intel stock investors. Moving on, he says, we are working diligently to address the challenges brought on by current demand trends and remain confident in our long term plans and trajectory. And, just to elaborate on the current demand trends, what happened during the earlier stages of the pandemic in 2020 and 2021 was PC unit sales jumped as people built out their home offices, as students bought computers because they needed to learn from home, and as households, instead of needing just one computer per household, started needing one computer per household member because everybody was at home learning or working and they couldn't just rely on having one computer at home anymore. So there was a big boom in demand for computers. But now that economies are reopening and consumers already have those computers, the demand is falling because when you get a computer, you're probably going to use it for several years. And so that pull forward of demand is now causing the market to kind of, there's a gap in the market now where this would have been a time when some of those consumers would have been in the market to buy a computer, but they already got one in 2020 and 2021. So now there's this kind of gap where Intel's sales are going to be low, and it's going to remain low for the foreseeable future, at least throughout 2023. That's what management is saying here. So accordingly, we are more aggressively executing on cost-cutting measures that we described in the third quarter. We expect macro weakness to persist at least through the first half of the year, with the possibility of second half improvements. And, looking at all of the other companies that I follow in this space, Intel seems to be more optimistic than what the industry expects in terms of PC unit sales. So Intel may need to bring down their optimism as the year progresses and as they realize that things are worse than they are seeing from their end. Or, they may be the one that ends up being right in their optimism in terms of the industry forecast. That remains to be seen, but I just wanted to highlight that of all the companies in this space that I'm following, Intel is on the more optimistic side in terms of expecting an improvement in the second half. In Q3, we provided an estimate for the calendar year 2023 PC consumption TAM, which stands for total addressable market, of 270 million to 295 million units. Given continued uncertainty and demand signals we see in Q1, we expect the lower end of that range is a more likely outcome. Near term, the PC ecosystem continues to deplete inventory. So here you already have management kind of acknowledging that their total addressable market outlook of 270 to 295 was a bit too optimistic, and now they're saying the lower end of that guidance is more likely. I wouldn't be surprised if in the next quarter they come out with an adjustment to that outlook, narrowing down the range perhaps from 270 to 280 million units, or maybe lowering the bottom end of that as well, saying 260 to 280 million units. Look out for that, and if they do update that, it could cause a further decrease in Intel's stock price. Longer term, however, they see the personal computer total addressable market of 300 million units. So this, whatever it turns out to be here in 2023, there still is growth prospects in the industry for the longer term to reach 300 million units. So about 10%, less than 10% growth in terms of total addressable market. That means new customers coming online. And then, of course, once that industry reaches maturity, then it just turns into refresh cycles, right? You're going to get compute people that have computers, and then they're going to need to upgrade them every few years. So, and I'll end with this statement here. Intel saying that while all segments have weakened, enterprise and the rest of the world, especially China, continues to be weaker than hyperscale. So the business side, the enterprise side, and China is weaker than everything else, right? And that's kind of understandable because we've been working, remote work got more popular since the outbreak, and companies have been bringing employees back, but not at the scale where it was before the outbreak, right? Now we're doing 3 days a week, 4 days a week, interchanging between when a certain group of employees comes into the office and when another group comes in. And so maybe there is some sharing going on in desk space and office space, and companies are not needing to upgrade or add new office spaces. And so that side of the business is weaker. And of course, the COVID lockdowns in China, and now it's been only a month or so of the reopening. So we'll see if the reopening kind of boosts demand for PC unit sales in China. All right, but that's all I've got for this video. Hopefully that sheds some light into what's going on with Intel stock. I'll see you next time for another video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.